Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 25th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with empowering beliefs, what I call the three forces of life. The three forces of life are knowledge, time, and effort. Force number one being knowledge. You know, today most of us will have 3 meals and maybe even a few snacks. We'll feed our body, but the question is, are we going to feed our mind? On average, how much money do you think folks spend a day on things like Starbucks or sodas or candy or cigarettes or snacks or beer and wine out there? Think it's $5, $10, $15 a day on average? Well, how about setting aside, say, $10 or $15 a day for an education fund for your mind? You know, things like books, seminars, videos, newsletters. This way, you get a constant flow of ideas and inspiration. Remember, the best money that you'll ever spend is the money that you spend to cultivate the genius of your own mind. Feed your mind, folks, at least 30 minutes a day. That money, that's a small price for the promise of unlimited potential. Force number 2 in life is what we call time. Because knowledge takes time, and the time is, well, it's just simply irreplaceable. It's something we can't get back. Now, there's 2 ways to acquire knowledge. We can either do it through trial and error, or we can hire a coach, someone who can teach us shortcuts, one that can compress decades into days. I don't know about you. I've done the trial and error way too often. In fact, I don't really do it that way any longer, because what I've learned is that what you want to do is go find somebody that's been successful. You want to go ahead and copy them. And I'd never ask you to do something that I've not already done. So I'd say go out there and hire the best coaches that you possibly can in the long run and in the short run. It'll save you time, and quite frankly, it'll save you money. Force number 3, that's effort. There's a huge difference between casual learning and seriously learning. And effort, folks, that's the investment that you will make that will open up the floodgates. So if you put in the effort, guess what? The light bulbs will go off. So always remember, spend the money, the time, and the effort to achieve whatever your outcomes are. These are the investments that'll turn on the lights, they'll sharpen your focus, and they'll start turning your wishes of wealth into reality. Well, let's go check out the wealth in the marketplace right now. We've got the Dow trading up 99 points. It's trading at 16,377. S&P is up 12 points, trading at 1869 and change. Composite up 43 points. It's trading at 4269. Russell 2000 up 11 points. It's trading at 1189 out here. Leading the charge, the upside is Regeneron Pharmaceuticals, REGN, is the ticker symbol, up a little over 3%, up $9 and change. Google up $7. Alexion Pharmaceuticals up 6. Biogen up 7. Tesla up $6. Actavius up $5.87. Jazz Pharmaceuticals up $5. Celgene up $4.50. Man, it's all biotech. This is a counter trend bounce out here. We'll go take a look at the volume inside of that IBB ETF out there. The downside, Intercept Pharmaceuticals, that's been a rocket ship. It's only down $3, not a big deal. Trading out at 363. GIII Apparel, it's down 4%. LinkedIn is off about $1.65. You've got Carnival Corp off $1.38 out there. Nothing really big dollar-wise to the downside here this morning. So let's start off. Let's take a look at the indexes, see where we're at. Let's get a feel for what went on yesterday, where we are at today, what's going on in the marketplace. If you didn't catch the first hour, we're going to start off with the NASDAQ Composite. Now, the NASDAQ Composite is the second strongest of the primary indexes. Well, let's take that back. It's really the third, right? We'll go ahead and we'll throw the SOX index in there because that is the strongest index by far. But the NASDAQ Composite through yesterday's close was up 1% on the year, a little over 1% on the year. Yesterday, price came down and it tested the 50-day exponential moving average. Price closed right on top of that number, right around the 42.27 mark. Today, no, it's just an inside day at this stage here. If we were to see the composite close above yesterday's high, let me get that number out here, 42.89.49. Then we can start taking a look at that possibly being a buying opportunity. The problem is that we know that inside of the Nasdaq Composite, the bears are just hanging out here. The bears are hanging out just, they had such a feeding frenzy yesterday, right? I think they're just in their bear cave right now, just kind of taking a nap. They had so much to eat. But we do know that their bears are on the lookout, and they're up here. You got a bearish engulfing candle that took place on March 21st. That price point says 43.44. That's one of your bear resistance lines out here inside the composite on March 13th. You're looking at a high of 43.39. Bears hanging out there. Those are the front. That's the front line for the bears. If you can get over that, guess what? You've got some bears hanging out on the March 6th high. That's out at the level of 43.68. So the line in the sand, as far as where they are drawn, is very clear out here. So would you take a long position? Nah, I wouldn't. I would wait for the resistance level to get hit. In fact, quite frankly, I'd have to say that bearish line is pretty solid. This probably becomes a pretty good area to be able to sell the composite. Now, we've got two Rhodes momentum indicator signals, two green boxes out here. That tells you that the sellers are in control. It's important for the momentum to the downside to stop. But if we do not see even a breach of yesterday's high in today, tomorrow, what have you, that tells us that we're going to see more selling pressure inside of the marketplace. Again, just trying to keep things in perspective here. Even that selling pressure still may not take back all of the gains for the year out here. That's in the composite. Let's go take a look, and we're only in, we're just going to stay on the daily charts here for the indexes for the moment. Let's take a look at the Dow Jones Industrials. The Dow right now trading out at 16,382. It's up 105 points out here. Yesterday, no damage done. No damage really whatsoever. You've got the last time we saw any bearishness out here was on the sideways action. That was the bear sash candle from March 19th out here. The high of that session, which we're trading above right now, that's actually short-term bullish for the Dow. That high was 16,363. You're at 16,381. A close above that level says it wants to go test the most recent highs out here from March the 7th. That's really where your resistance level, your resistance line is, right around the 16,505 mark out here. We'll see if you take a look at yesterday. Yesterday didn't even get down and even come close to the 50-day exponential moving average. So what has been the weakest link out here, which is of the indexes that we take a look at and we track, it is the Dow. For the year, meaning since January 1st, the Dow is down about 1.8%, down about 300 points, of course, and now it's only down about 200 points for the year, with being up about 110 as we speak right now. So not a lot of the Dow, quite frankly, it's got its work cut out for it to get back to December 31st, but it's really the composite that's got its line of defenses where the bears are just simply hanging out. That's what's going on inside the Dow Jones Industrials. Let's take a look at the trannies out here. Let's take a look at the transports, often forgotten about. Yesterday's move down, nothing bearish about yesterday's move inside the transports. They're bearish engulfing their line of attack out here, which is going to be tested, looks like today or tomorrow. That high is going to be 76.24 and change. You are at 75.81 as we speak right now. So that's the only resistance that is inside the transport. So that might be one to be paying attention to. And that, again, is the high of the March 13th candle, 76.24.11. I'll be watching that. I think you should as well. That's on the trannies. Let's take a look at the NDX 100. Well, just like the composite has its resistance line, so does the NDX 100. The bears are lined up in a row. The resistance level inside the NDX 100 set up at the price level of 37.17 out there. That's the bearish engulfing candle from March 21st. You can see also, just like the composite had one on March 13th, so does the NDX. So that is where we want it. Now, that has been the strength in the marketplace, right? The NDX, the composite. And so we really want to watch what happens as that battle unfolds out there. Let's take a look at the New York Stock Exchange, get an idea for what's going on here, the wider swath of the market. The New York Stock Exchange needs 1,766 net advancing issues today in order for the bulls to take control. Right now they're at about 1,571. So a lot of time left in the trading session. The New York Stock Exchange running into resistance as we speak right now of the bear sash candle that took place on March 19th. Now, look, a bear sash is more bearish than a bearish engulfing out there. We take a look at that resistance. That resistance is up at a high of 10,443.39. You're at 10,428. A close above that, that would say, hey, I want to go up and I want to test the highs out here. That's going to be your March 7 swing point. That's going to be anywhere from the low of 10,475 to the high of 10,550. That is what's on our NYSE. You can see the wider swath of the marketplace here held pretty well yesterday. Let's take a look at the Russell 2000. Let's take a look at the Russell 2000. We could look at the 1000 if we wanted to, but let's take a look at the Russell 2000. Let's kind of keep things on track here. Russell 2000 yesterday also moving down to getting very close to piercing or touching the 200-day exponential moving average, the 50-day, which is at 1168. It was not able to do that out here. Sideways day today, or an inside bar, so not really releasing a whole lot of information. The Russell 2000 doesn't really have much in the way of resistance as the NASDAQ Composite, as the NDX 100 has out here. So the Russell 2000 still in bullish mode out there. And we'll go take a look at some trend lines. Maybe we'll apply those to some of the charts here in the not-too-distant future. Let's go take a look at the SOX index out here. This is a thing of beauty for the bulls out here. Now, what the SOX index does have that we want to be paying attention to, it did make a higher high. This is the daily chart done yesterday. Made a higher high, eventually sold off, still doing that on less relative strength. Now, no bearish reversal signal as we speak here today, so it still is a bullish pattern. That is nothing more than just a warning sign. It's just an indicator to be used until you get the reversal. It really has, in my opinion, no meaning. No significant meaning whatsoever, the mere fact that you would have divergence. Divergence comes when you get the reversal signal. We do not have that in the SOX, and the SOX is the best performing index out there, being up 9% for the year coming off of the December 31st close out there. So this is still in a very nice, strong, bullish momentum trend to the upside, even with yesterday's price action out there. We take a look at the S&P 500. Let's go close in on that. It's trading out at 1869 right now. Well, it was. Give me a moment here. There we go. It's trading at 1869 as we speak right now. This S&P 500 really doesn't have much in the way of resistance. It's just simply chopping around in a sideways consolidation mode, but really no resistance out here. I guess if there's any resistance, there's really no resistance candle-wise, bullish or bearish, that I can see inside of the S&P 500. So what does that say? Well, its swing point high happens to be from Friday out here, and it's trading inside that candle session. If it closes inside there, whoops, what the heck is going on with my little mousey? In the low of that session from March 21st, a couple trading sessions ago. The low is 1863. You're trading inside that. You close inside that. Does the S&P wants to go test? 1883.97. Right now, we got the Dow up 106, S&P up 12. We will be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Right now we've got the Dow up 99. The S&P is up 11. Let's go check in on the sectors within inside the S&P 500. Let's go see what they've got going on out here today. The XLF specifically, we want to take a look at. We'll take a look at each of them or most of them. If we take a look at the sectors right now to the downside, you've got two that are trading the downside. Well, the XLF is actually flat right now. The utility sector is down 12 cents. The XLK is up 22 cents out here. So let's go. Let's start peeking in. I'm going to start off with the healthcare sector, the XLV. What was it doing yesterday? If we take a look at just simply retracements from low to high, meaning we'll use the swing point, the most recent swing point low. That's February 5th, all the way to the high that was put in on March the 6th. We'll see basically yesterday was about a 0.618 retracement. 56.88 would have been the exact number. Got down to a low of 57.11. So not too bad out there. It did pass a B point with volume out here, with big volume, because the B point of the A to B equals CD down, that was March the 14th. That had 8 million shares, and it passed through that level on, looks like on Friday with 19 million shares. So let's go measure the A to B equals CD to the downside inside the healthcare sector. Oops, I don't know where that came from. Let's try this again out here. So this is a sector that is struggling. Now it is I believe the third weighting structure inside of the S&P 500. So it's made the 1 to 1.272 on the way down. This would suggest to me that the healthcare sector wants to probably make a run for the $55 area. That's your 1 to 2 A to B equals CD to the downside, and your 0.786 retracement out there. That's at least what it looks like as we speak right now. So far, this bounce here this morning, 2.4 million shares in about the first hour of trading versus 20 million shares to the downside yesterday. So no conviction behind the bounce to the upside as we're speaking here right now. And that's in the third weighting structure, with inside the S&P 500, that is the healthcare. Let's go check out the number one weighting structure. That is the technology sector. As we take a look at yesterday, what's interesting about yesterday's move lower in the NDX 100 inside of the Qs, inside of the composite, quite frankly, the XLK hardly budged. I mean, it closed the session before, right? It closed out at 36.24. Yesterday it closed out at 36.28. 4 pennies out here. Hardly budged. In volume yesterday, no big deal. We saw big volume inside of the Qs, right? We didn't see big volume inside of the technology sector, inside of the S&P 500. What we got here is your good old-fashioned consolidation pattern that is going on inside of the inside of the XLK out here. The bottom of the consolidation, we'll probably use the February or the March 14th low out here. Also the February 28th or March 3rd low. So here's your consolidation box inside of the XLK. Right now it's trading into the swing point high, which is from March 20th. That had 6 million shares. The high is 36.75. You were pushing into it even yesterday with 10 million shares. Today you're up inside it with 1.2 million shares. Looks like the XLK wants to go test the top of the consolidation box out there. That's on the XLK. That's on the daily chart. Let's go look at the energy sector out here. Let's look at the XLE. It's up 57 cents. It's actually one of the leaders here. Well, the leader is the industrial sector. That's up 0.8%, and the building sector is up 0.8%, but not far behind is the energy sector, the XLE. What did it do yesterday? Not a whole lot. Just really, volume-wise, the downside, nothing. 10 million shares out here. The swing point lows got 11.2 million shares from March the 13th. So what do we have going on inside the energy sector? Looks like another little consolidation box that is setting up out here. The top of the consolidation box, meaning the level of right around $88 and a bit of change out here. The bottom of the consolidation box really being about 85.97 out here. What is the energy sector, the XLK, doing? It's trading inside that swing point from March the 11th out there. It's trading inside the swing point from February 24th. No reason for it to not go test those highs as well out there. The bounce here this morning, 1.8 million shares. Not exactly like it has a ton of conviction to the upside, but it's not too bad. Although I don't expect that volume will keep up at this pace up here as we take a look at the energy sector. That would mean you'd really go take a look at ExxonMobil, you take a look at Chevron, Schlumberger. You get the top three, you're probably already about 40-45% of the weighting structure inside of this ETF. Let's go take a look at the financial sector out here. Financial sector yesterday, what did it do to the downside? Nada, nothing. Nothing of significance. Trading inside this nice sign of strength out here from March the 20th. So to the upside with 91 million shares. Yesterday, what did it do? Moved sideways with 55 million shares. And that's not exactly a breakdown. And this market will not crack without the financial sector moving to the downside. 877-927-6648. Of course, we got to take the technology sector with it as well. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is up 80 points right now. S&P up 8.5, and I see some chatter in the den. Folks taking a look at the. Taking a look at a 30-minute chart out there. I'm going to actually, now this is, I've been using eSignal as my data feed vendor provider for, 20 years or so. Great data service out there. Feeds all of the different charting applications. And just recently I started using their charting application. I'm actually creating a couple of tools for it. That's what I've actually got up on my screen here. Now, this one here, I've got the background of black. Just with regard to this chart, it's just kind of helpful. Now, if you take a look at the blue solid lines that are going on there, that's using a linear square regression channel tool, and it's available on a lot of charting applications out there. You can see how well it's actually held. What it's really doing, it's a method for finding squares that fit some type of some type of statistical best plot fit out here. And if you just simply take a look at it at the highs and at the lows. So we've seen here the ES Mini, and that's what I'm taking a look at. And it's a 30-minute chart that I'm looking at. And if you take a look at both the low from yesterday as price was moving down into the lows out here, you can see how the channel line, this linear regression channel line, was acting as a support level. We've seen a bounce off of that area. since about 1 o'clock yesterday afternoon. Now, these little horizontal lines that you see on my screen, the green, the light blue, and the red line out here, those lines, those are the TAS signal box lines, the unfair low, the unfair high. And if you haven't had a chance to check that out, go to the homepage at TFNN.com. There's a video that John Logan does every morning at 8 o'clock. He'll teach you about how to use this. And in this case here, so take a look at it. As we saw price move up, you can see this. You might be able to see this a new box has formed on the 30-minute chart. And what it did was it said that 1863.22 was going to be your resistance area. And what we actually saw was we saw a price that got up to just a tad higher than that. At this stage here, the level of support, which is where price is trading into right now, is the 1857. It looks like about 1857. Maybe 1856.75. And so on a 30-minute chart out here, it closed below that level. And what that says, we ought to see price pull back to about the 1850 range. So we've seen a decent bounce in the market. And this is just a 30-minute chart. So if I change it to different time frames, it's going to always give us a different message out here. But you can see this 30-minute time frame chart here for the ES Mini is pretty good. So what does this mean here? It says, hey, even if the market doesn't break to the lows out here, what we should, or break lower during the trading day, what we ought to see is pretty much a market that just simply moves sideways. So that's what the 30-minute chart on the ES Mini shows. And I've got some other tools that I'm building so that I can also use this software package. Well, the charting package already comes with inside the application that I pay a small fortune to get the data feed for everything that we take a look at. In any event, we were looking at at some of the sectors with inside the S&P 500. The XLF was one that we're looking at, and if you take a look at yesterday's move, really no big hurt out here, no pain yet inside of the XLF. That was the daily chart. Now, the XLF is also done, just to put this in perspective. The XLF had been traveling in this pretty nice rising price channel, and that's off of the lows back in November 2012 out here. So since that time period, nice rising price channel. Of course, price broke out of it back here on January 23rd, and it took all the way until March 7th, 2014 for price to try to get back up in there. And it tried to get back inside the rising price channel and failed. It failed on that trading session. It failed on the trading session here of March the 10th. It also failed 2 days ago, March 21st. So it has not been able to get up in there. That would certainly be bullish for it to get back inside there. It's not exactly bearish, but also it would be much stronger for it to be able to get back up into that level. That's on the XLF. Let's go check out a couple of the other sectors out here. I mentioned, let me go see what is actually moving to the upside. So you've got the, pull this down a bit here, where they were up 1%, they're not. So you've got the industrial sector is the leader, the XLI. So let me find that. Let's go see what it is doing out here, see what its chart looks like. So you got the industrial sector. Let's pull this back. Let's clean this chart up a bit here. Clean it up so much that I almost deleted it. Okay, so now let's take a look at it. So yesterday, this thing was coming into was testing the swing point. So it was testing some horizontal swing points out here. Let me draw a line across the chart out here. Let's also go ahead and take a look at the volumes so we can benchmark the volumes. So as we look at the industrial sector, now weighting-wise, it's like 7th. I believe it's 7th. So that means it's probably only about 3.6. It's maybe 6-7%. I'm going to guess off the top of my head out here. But let's just take a look at what the industrial sector was doing yesterday. It made a low. That was on the Vladimir Putin move down on March the 3rd. That was that little scare. That was 17 million shares. Swing point nonetheless out here. 17 million shares. That area was hit and tested on March 14th with 17 million shares. So about the same volume. Rejected it on price, and we saw a little bit of a bounce. That bounce took us to, let's take a look at retracement-wise, from the high from March 7th down to the low, that the test, about almost a 0.618 retracement, just shy. 52.49 would have been the number. What it actually got up to was 52.38, so not too shabby out there, about 11 pennies away. What did it do yesterday? Well, test was on even lighter volume. Talk about lack of energy to the downside. Yesterday was 14 million, so now that was a test of 2 swing points out here, and it was not able to bust through that area. So, not that the industrials if they were to break that, was going to put a huge negative inside of the S&P because of its lack of weighting out there. But it was not able to bust through those lows out there. What does it mean? Look, we are trading in a consolidation market, period, a sideways consolidation. And that's really what I was covering during the first hour. When we take a look at where the market closed on December 31st versus where it's trading right now. And other than the SOX index out there, gold, we'll take a look at the commodities here. Let's take a look at one more sector, and then we'll go take a look at the commodities out here. So let's see, what else do we have? We've done the energy. Let's do the XLP. What is the XLP? Is off the top of my head, what is it? XLP. I know what it is. That's a consumer staples, I believe. Consumer, not discretionary. XLP is consumer staples out here. So let's go take a look at this. See what it was doing out here. Let me just clean off the chart altogether out here. We take a look at yesterday's action. Really not doing much. In fact, yesterday's action. So take a look at the consumer staples area. This is pretty strong. We covered, I think it was during this first hour, a gap up, and being able to fill that in with wide price spread accelerated volume. Now, this gapped up on March the 4th, but it didn't, and it did have wide price spread, just simply by taking a look at the close of the prior session versus the open of this session here on March 4th. But it didn't have wide price spread out there. It was only up with 7.2 million shares. Heck, it was taking over a swing point that had 5.4 million shares and coming into a downdraft that had 14 million shares. No wonder here's the resistance line inside of the XLP. But still, just you can see here's a consolidation sideways ever since that gap up on March 4th. We're now, 20 days, we're 3 weeks into this session out here where it's just simply traveling sideways. Of course, yesterday's push lower was 6 million shares, moving into that gap up with 7.2. Not a lot of conviction here to break things to the downside. Let's go check out the commodities, see what we have going on inside gold and silver out here. We'll take a look at light sweet crude as well. I gave you my hypothesis yesterday on what they might try to come up with at the G7. Got several emails from folks saying, "Are you crazy?" I guess I am crazy out there. But let's go cover the. It was just my hypothesis. Let's look at silver. Silver here yesterday forming a 0.618 Gartley buy pattern. Doing that as it got down to a low of $19.92. If that 19.92 gets taken out, you've not seen a reversal signal here as of yet. It says 19.46 would be on the way. That would be your 0.786 retracement. But right now you've got a nice little buy pattern. You just do not have the bulls jumping on board just yet. That changes if you were to see a close above $20.29 today. You're traveling at $20.10, so only 19 cents away from giving you a nice little reversal signal. Otherwise, it's not telling you a whole lot other than that you formed a pattern that has not been confirmed. That's what's going on inside of silver. Inside of gold out here, gold is hitting the trend line, the channel line, the bottom of the channel line, doing that nicely, get into the 0.382 retracement, 13.11. If that is where we see gold reverse from here, and we've got one heck of a strong move up. It's already 9% off of the close from December 31st. If it does a 0.382 retracement, it'll be much more than 9% on the next move to the upside out here, but it needs to hold this area. If it does not hold this area, it's trading at 13.14 right now. It'll trade down to about the 12.62 as its next mark out there. No Gartley buy pattern when we take a look at gold out here. Just kind of been a straight line move back to the bottom of the rising price channel out there. Let's take a look at light sweet crude. Let's go put that on my screen out here. Let's look at the continuous contract. Let's see where this is trading just sideways out here. My hypothesis is this is where the damage could be done in the marketplace to Vladimir out there. So it just depends on, and there are ways around it. Now, the hurt. So I just kind of explained a little bit more about yesterday's my little hypotheses yesterday is and I think that President Obama is headed over to the Middle East, isn't he? And just think if prices were pushed lower, that'd be good for you. That'd be good for me. Seems like that would be good for the folks in Europe, right? They're dependent on, people are going to pay what market price for oil out here. So if prices could be pushed lower, how do prices get pushed lower inside of the oil marketplace out there? There's a number of different ways. Certainly, one could just be just the mere thought that the strategic reserves were going to go ahead and be opened up for a bit or what have you. I mean, there are ways to do that out there. So I think there's an economic way to put some pain on Putin, and everybody else would be celebrating out there. Something to think about. In any event, that's my hypothesis. You know what? We'll know if Steve's hypothesis is correct or not when we see, if we were to see it close below the price point of $97.37. If we see that, then you've got one heck of an A to B equals CD down in that complex, and we'll say that I must have been on the inside of what the G7 was talking about yesterday. So I didn't mean that it would happen necessarily right away. I mean, they had to get together. They had to say, hey, how can we put a world of hurt and some pressure on this guy? And to me, that becomes the easiest way to do it, where everybody wins and he loses. Something to think about. In any event, let's go take a look at the 30-year Treasury out here. And I'm saying that if, in fact, we were to see a move below that area, then we all want to jump on the short side of light sweet crude, as there's a pretty good chance that that was the outcome, and that is what may be underway out there. But it's just always a game of risk, right? It's always a game of probability. Best game out there in the world. Right now, bonds just moving sideways, potentially setting up an A to B equals CD to the upside. Of course, we know that they formed a nice little Gartley buy pattern. That was on March the 7th. What we saw was a retracement. We saw a move up and then a move back. The move back was a retracement. It is possible, very possible, that what we're going to see out here is a move in the 30-year Treasury right up, make a 1-to-1, A to B equals CD, right up into resistance. I mean, it hits that number like Johnny on the spot, that 135 area, and that is long-term. That is significant resistance out there. So that looks to me to be the pattern that bonds want to actually make a move higher out there. Let's take a look at, not much to take a look at inside, natural gas actually up, 10%. So natural gas is on the move this morning out here, but natural gas really wants to, looks more likely that it wants to move a bit lower. Let's see, did it take out? I don't think it took out this B point. No, it didn't take out the B point with volume. We'd like to see it move lower, so it would set up a nice little Tiger Gartley. We haven't seen these Tiger Gartley patterns in a while out here. And that would take place at about the $4.14 market. Let's take a look at what's going on around the globe. They're still celebrating over in the UK, over in Germany. Right now, you've got the DAX is up 1.5%. Let's go see what it is doing out here. Here's the Shanghai, by the way, the Shanghai on a monthly chart. So you can see on the monthly chart, the Shanghai is in a descending price channel, has been ever since the August 2009 time frame. It is doing its best to try to break that to try to break that trend. If we were to see a break of this trend line out here, this channel line out here, that would be very bullish. That is in the monthly chart for the Shanghai. Let's take a look at the DAX out here. I guess it's the monthly chart for the DAX. And it's just traveling right around this 1.272 butterfly. Let's put this on a daily chart, though, right now. See what's going on the daily basis with that move. Even with a nice move, 133 points right now. I don't have the volume, so no way for me to tell whether or not this is trying to form an A to B equals CD to the upside. It is trading into the swing point here that was recently formed from 2 trading sessions ago, March the 21st. So a close above 93.7694, regardless of volume, would be bullish. That's inside of the DAX out here. Let's look at the FTSE. Let's put we had that on the long term. Let's take a look at the FTSE out here. We'll look at the FTSE when we get back. On a monthly basis, though, the FTSE looks a lot like our markets, doesn't it? Nice rising price channel off of the 2009 lows out here. You can see on a monthly basis, the FTSE is not broken down whatsoever. It's trying to get above its 2007 highs out here, but it's struggling to do so. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now we've got the Dow is up 47 points, trading out at 16,324. S&P is up 3.5. 4 points. Composite up 3.5 points as well. Russell 2000 up 290. On the intraday charts out here, let's take a look at the 120-minute chart here. For the Dow, we saw it move up into the 0.786 retracement level at 16,326. That's coming off of the highs from 12 noon on March 21st down to the lows that were put in yesterday at 2 o'clock in the afternoon out at the 16,134 level. We've since seen a bit of a sell-off out there. Volume-wise on that way up was 33,000 contracts. On the way down so far, we've got 37,000 contract. So we've got more volume pushing to the downside as we take a look at a 30-minute chart out here, and that is in the Dow. And we've got still in that session, we've got an hour and 5 minutes to go. So you've got volume moving to the downside from an intraday standpoint. If we take a look at the Euro Japanese yen, again, it's moving a little bit lower out here. So no wonder that the markets are giving back some of the early gains thus far until we see this consolidation box broken to the upside or to the downside inside of the Euro Japanese yen. Just consider the market to go ahead and continue to trade sideways, albeit a pretty decent consolidation. Of course, if we want to take a look at the consolidation, we just switch over to the S&P futures contract out here. Here's that nice 112-point consolidation. What price did yesterday was came back and tested that area. So the test is, hey, do you really want to move another 112 points higher, taking you to about the 1957 level? Yesterday's test was a test of the top of the consolidation and a rejection of that area out there. Today, just really a sideways bar, not providing you with a ton of information. Still the weakness inside of the composite, inside of the NDX 100 out here. Let's go back and take a look. In fact, we take a look at the NDX on a daily chart out here. If we take a look at the continuous contract, we drew this pattern in yesterday. If it cannot hold the lows of yesterday, which is 35.7550, it'll make a run for the 35.37 mark. That's where it forms a 0.618 Gartley buy pattern. So we will see. As far as the New York Stock Exchange right now, let's switch over and take a look at that, see what that is doing. Let me take a look and see what the net advancing issues today right now are. Only 757. It needs 1767, I believe, is the number. So it needs another 1,000 on top of this. It is, though, really just traveling sideways. You can just see this nice little consolidation out here. Not a huge consolidation from a price standpoint. You're talking the New York Stock Exchange, the lows of about 10,275. Up to really maybe about 10,005 and change out there. So you got about a 225-point move to bust through. But that does mean if you were to see a close below 10,276, price would move back to the 10,200 level. Right now, the battle inside the NYSE is the level of 10,387.17 out there. Let's check in on the VIX index. The VIX index here trading at 1464. The 50-day exponential moving average is priced at 1487. I would imagine that we will see price end up somewhere right around there. Another day where the VIX index just simply traveling sideways with regard to its closes out there. So that's what we have going on in the marketplace, folks. Thanks so much for joining me on Terrific Tuesday. Of course, on Terrific Tuesday, we've got a full lineup. We got Basil Chapman for you. He's coming up next. He'll teach us about the Chapman Wave. After Basil, we've got the Options Hour, so stay tuned for that. Then we've got Daryl Martin, David White, the Andy Hecht Show, the Techno Mental Commodity Hour, and the Tom O'Brien Show from 4 to 6. So thanks so much for joining me, folks. Have a great Tuesday. I look forward to seeing you bright and early tomorrow morning. Take care now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.